Buenos dias. Other way, brother. Buenos. With the tilde over the N. Orale. But no, let's see what we can get. Not a fan that we've already delivered into the buy side. So we spoke yesterday in the recap. We were holding the 1 hour fair value gap here. If we could hold that, we would want to see price reach into the buy side. And now we've already done that before the New York session. Right, so when we kind of deliver into targets prior to New York starting, a little bit wary of what the future price action wants to do. As far as the daily, let's get some daily levels. I want the daily. I've already hit that. Value gap. Okay. 1 minute till we open. I mean, if I'm being honest, if we're gonna keep, oh look, we've just hit that liquidity. Here. So this is our buy side pools for the day. We've been respecting discounts, obviously. YouTube model, fair value gap holds, fair value gap holds, fair value gap with old daily high holds, into new fair value gap that holds, sending us higher. We're testing this fair value gap here, so I'm interested to see if the opening will want to hold this level. We've made equal highs here at a previous day high. 9:30 right now, so I want to see this go to that 1 minute. Right, this is a 5 minute here. We have lows. So as of now, this 5 minute here has my interest. We'll see how we open up. We've just cleared this high. Anyone hearing? Oh no, not the muted morning again. Let me know though. Guess I got to clarify every time. Okay. See, that's why sometimes you be playing me. You be saying I can't talk. Cool. Well, as long as one of y'all can hear me. Holding that consequent encroachment still. As I mentioned, buy side here paired with old daily high is what I would look for. We've cleared these equal lows once. Sensitive volume imbalance here in the form of that bearish never returns. So when we overtake that while forming a new volume imbalance, we would expect that to hold us. Come in, create an intermediate low here at this. My short-term low to the left and right. We've cleared equal lows with this run lower, right? Let me take you to a 30-second. Equal lows here. Cleared. We've hit a 30-second volume imbalance as well. 30-second volume imbalance, 30-second inversion potentially here. On a 1 minute, 1 minute's just confirmed it. But we should start reaching into this buy side here. So buy side, really double buy side, old daily high. Going to be a important area. Yeah, I have that. August 1st. Just the bearish fair value gap. Or I guess the volume imbalance plus fair value gap. But yeah, same level for me. Okay, nice. Gotten into the first buy side, so just continuing to run buy side. Now I'm interested though to see. Okay, I was gonna say I'm interested to see if we leave a fair value gap. Didn't. That's fine. Might still leave one. We leave one here. We have two really, here and here. That inversion's never been touched. See the 2 minute. 2 minutes just closed above. Okay. See if I want to give a retracement into one of these discount fair value gaps here. Let's see if we were to take kind of the swing. 30 seconds using the old high perfectly as support. So I'm trying to think if we may not want to even return low to a high to the lowest low. We break that low. Or we break that high. Breaker, old high. We might just pump, give no retracement. Another buy side target here. We could leave a 2 minute fair value gap like that. Ooh, 2 minute volume imbalance here. So far, still bullish. Haven't even touched that volume imbalance. 30 seconds, same thing. So it's the same level. Want to see if we'll give that a touch or not. We leave that open, we might just push straight up into that buy side here. So we left that 2 minute. I would like this 2 minute, honestly. If we did give a retracement, preferably we get into that 2 minute here. Paired kind of with the old high. Is there anything on the 30? No inefficiencies on the 30 or 1 minute. So the 2 minute, potentially the 5 as well. But yeah, I like that old buy side pool paired with fair value gap. Mm-mm. Right, this is the 2 minute. One minute, okay. So we use that old high, right, as support, paired that with the 2 minute. Never got into the consequent encroachment. That's okay though, because that high here can hold us from actually reaching into that as we're seeing. Want to see if we want to break structure here at a high now. $97. I like 90. Yeah, 97 and 3/4. That's that what this buy side is here. Oh, whoa, 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 whoa. I lied. What the hell? They got taken off. Bruh, get there. There it is. Okay, now we got it. So yeah, 96, 3/4, just under that. Right, that's that daily swing point. That'll be a pretty significant area in price if we can get up there. Yeah. So we've already hit, this was an old daily high. Now we have this high we're aiming for here. That's that buy side swing point. Continued bullish prices, higher, 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 higher. That's why we say we're not trying to call tops. Not trying to do that. We got the retracement we were looking for yesterday here. Held it. So now we're looking for, yeah, expansion. Right, 5 minutes holding. All the 5 minute discounts are holding. Starting from here this morning, as we mentioned. Setup holds. Fair value gap holds. Fair value gap holds. Fair value gap holds. Baby fair value gap holds. Fair value gap with volume imbalance holds. So if we're going to just keep doing that, there's no need for us to try to, I guess, let's say, go against, right, the trend we've established here. So now I'm going to look at this. So we have the 2 minute here, the 1 minute, taking the 1 minute away. Because 5 minute structure has been respected so kind of obviously, I like the fact that we leave now a 5 minute fair value gap here. So for me, right, if we're going to continue bullish, no need for this 5 minute fair value gap to be broken, which already could be a potential entry, but let's see, stop is a little large, especially if you're aiming for that target. You'd still get a 1 to 2 if you use consequent encroachment. I mean, in theory, right, this wick broken with the fair value gap should be BPR. So if that's the case, we shouldn't really need to go any lower than this fair value gap. Okay. I like something like that, actually. Broken lower, respecting it. Yeah, I don't mind that there, especially because now we're consolidating, okay? So I kind of like to see, when we have fair value gaps like this, I like to see lows being created right near that level. It'll give us a reason to kind of run those lows as we return into the inefficiency. Oh yeah, B. I always have B adjust on. Adjusting for the contract changes. Holding the old buy side pull though, that's what we would really expect to see. So yeah, I mean, everything right now to me is bullish. I wouldn't be looking for lower prices. I like the 5 minute. We may use the 2 minute instead and run, not going into the 5. But I like that the 5 minute is within the 2 minute. Right, it would give you a good opportunity. Let's say we could even go 3, like 2.5. If we can get up into that target there. That would be, okay. Yeah, now we wait. Underneath the 5 here, with a closure of the body, then we should not be worried, but then we would have a scenario where we may want to start revisiting this inefficiency here. So there's that 5-minute touch. Ideally, we'd want to see the actual candle hold this. So see if we can't wick up there quick. Close above that level. Couldn't. We did hold the actual fair value gap though. That's fine. So let me move this. Right, we didn't hold the high, but we held the 5-minute fair value gap itself. Ideally, now we see expansion here. Because like looking here now, right? All these equal highs, or relative equal highs, excuse me. Trendline liquidity, we call. So we'd want to see that get ran. This high, these equal highs, these equal highs. 1-minute bearish fair value gap, want to see that overtaken. That's a good sign that we are on side with order flow. If we can overtake old premiums. So let's watch that there. Couldn't get above. Notice how we wick into consequent encroachment of that bearish. Want to see us get above that there. Get above that would be nice. We could then run. I went long off that consequent encroachment. So we'll give you guys that. We want to see price start expanding now. Two handle stop as usual. Here, I'll just share it. We'll watch there together. Right, so consequent encroachment of the 5-minute aligning with the 1-minute and the 2-minute. We use in that. We want to see price expand, as we mentioned, through the highs. If we can get over the equal highs for me, really, clearing this here. Clear that, close above that, okay. New structure in my mind. Okay, so stop can go under the 5-minute. At this point, this should be a breakaway. Don't want to see price obviously coming here. That inversion held us. Don't care about that. Oh, yes I did. Don't care about that. So really utilizing the 5-minute here. We did close above. Okay. That holds bearish volume imbalance. 30-second time frame though, we can negate that. 2-minute closed above as well. Don't like that we're retracing here actually. I would have preferred, if we were going to close above that, would prefer to see price start expanding. Because I don't really want to start revisiting old discounts. We'll see what we can get here. I don't like that. So we have SMT here, right? NQ. We have not ran the highs in NQ that we have ran here in ES. So I'd really want to see NQ actually catch up. Don't want to see NQ go lower. Want to see NQ catch up, break through the high, which would allow ES to continue to expand into our objectives. All right, buy side. What if we want to continue to go? We clear that buy side. As I mentioned, we hit that 5-minute perfectly. So honestly, we can go into it one more time. If we wanted to actually wick that low. We're going to learn from yesterday. 2 ticks underneath the fair value gap. Right, in case we want to fully use that fair value gap. Excuse me. Not trying to be hit by spread like we were yesterday. Very minuscule risk changes anyway. So just a 2-handle stop. Low risk. Just for my own personal self. Ideally, we don't even clear this low. Just because I want to catch the swing low. Y'all know how I be. Get me on a swing low here. Let's run into that buy side and create a swing high that we exit on. Bye. At this point, okay, we come back into this inversion. If we break through this high and close above it, stop goes underneath our entry swing low. Because now we'll have created an intermediate swing point, short-term low here, short-term low here, intermediate term low, inside higher time frame, discount, followed by breaks in structure once, true break in structure if we close above. As I mentioned, we never close above this buy side here. We run the buy side, We don't want to see that. We want to see price close above, signifying expansion. So same thing we've just gotten here now. I'm not trying to see price wick here and close. Ideally, we close above. Not even 10 o'clock yet, right? Still early, but we close above, which would leave this as a new fair value gap. There's probably an inversion in here. No inversion in here. Yeah, just want to see price close above that. Because now if we kind of keep wicking here, right, we'll kind of create a little 1, 2, third drive. Doesn't always mean reversals. Could just mean higher likelihood if we don't deliver into our target. But so like I mentioned, we do close above the buy side. We formed a new discount with a swing low and a swing low. Okay, boom. Stop moved. One handle, minuscule risk, could care less. Target. Inbound. Now, here's what we should have done, okay? We're at 5 handles. Should we take a partial? Yes. Are we going to take a partial? No. Do as I say, not as I do type shit. I mean, I feel pretty confident, right? We're extremely bullish in my mind. We're reaching daily points. We're holding structure as I would expect. We should get up there. So I'm fine holding. Just a full pull. Thought it'd be 7 handles there. A little over 7. Oh yeah, with the volume imbalance especially. Now my thing is, all right, I don't want to get too greedy, but do we run for? No, it's okay. We'll get out here. Or do we partial out here and aim for the high? I'll let y'all decide that. Oh gosh, you gotta think quick. Nah. We'll content. If we get another entry, we'll just take that. So boom, there we go. Clean, clean, clean. Love it. No. That better not be a swing high. We better just keep running. Yeah, exactly. I'm not too right. If we get another opportunity, yeah, I might take it, but. Cool. So that's just like we like it. I mean, come on. Perfect entry. Right? What's the understanding here? Trade recap of it. We'll do a live one now. Obviously, as we mentioned, we're failing to go underneath. So it all started from here, the 5 minute. Since this morning, when we create this YouTube setup with the new week opening gap, that initial 5 minute holds us. So I'm looking at that. All right, 5 minute holds us. We expand away. We create now a 5 minute fair value gap here as we break through the high. Notice how we return into the high perfectly balanced. 5 minute holds us. We expand above the previous day high with another 5 minute. Okay. Well, that 5 minute paired with previous day holds us. We expand again through buy side with another 5 minute. Okay, that 5 minute holds us as we expand. Now we have another 5 minute here. Doesn't even get traded into. Volume imbalance, right? New 5 minute created. So we're seeing, does this 5 minute want to hold? Yes, look at that. Consequent encroachment not even being flirted with the bodies. This 5 minute holds. Breaks through now our buy side pool with another fair value gap. Another 5 minute fair value gap. So all the logic points to, okay, why would we, right? If price is shown as respecting the 5 minute, 5 minute, 5 minute, 5 minute, why would we just suddenly choose here to not respect it anymore? right? So we're playing the probabilities that price is showing us what it wants to do. So we just got to hop on board. And now, especially closing above that old high with the buy side, right? That's even more important. Understanding that the 930 couldn't even break through the 5 minute in itself. So even though it's a Judas swing, it's very small just to run out this low. Come on, brother. See, that pisses me off right there. Like, what you doing? You couldn't exit me here on this candle instead of this candle? Is that too much to ask? I wanted the low to high perfectly. As of now, 45.97. That's what we just hit, brother. I'm tripping. But yes, that is a good number. Do I look at IPDAs? I mean, in a way, but I guess I wouldn't say I'm not specifically looking at it. Like we're at the 20, 40, 60-day look back. I don't have that as something I'm looking at every single day, if that makes sense. 45.97. I'm tripping and you're tripping. One of us is tripping. Look at that, the high of the candle right there. 4597. Oh, you want to get through that, I guess. Okay, unless we look at different charts. What was the target? Buy side. This is the daily swing point. Daily objective. Okay. Important level. Weekly objective probably as well. Yep. Weekly high, daily high, hourly high, 4-hour high, 15-minute high, 5-minute high. Okay. So when things are like that, those are going to be very significant areas in price. And that's why we took advantage of that. Yeah, I don't look at Z. ES1 I always stay. I stay on ES1 only. But as we often mention now, say we are bullish, want to continue bullish. After hitting buy side, we can return into untapped inefficiencies and continue our delivery. Okay. So now we have this delivery here, this fair value gap. We also have this one. I like low, high, low, low, broken. Breaker here, aligned with. Honestly, I prefer a little deeper at this point. Yeah, I would like that fair value gap here. So we do have this one. We could hold from here. 100% valid. I would just like a slightly deeper retracement into this one, which we may not get because this wick here, as we break it with the fair value gap, is going to be balanced. So we'll look at that actually like that. This is where I would want price to hold from. On a 2-minute, it's a 2-minute fair value gap. So maybe we don't even come into. There's a 5-minute volume imbalance though at the low of it. Hey, on the 5-minute sense though, low to high, we'll take that. Yeah, let's look. I like that level. Equal lows here now. So I actually would like a little stab into that, bleep, and then run. Clear the equal lows. Little liquidity grab in the short term. What we can do, let's do this. Let's go with a. Well, we traded into that, so we can't use it. Maybe. Okay. So coming back into that fair value gap, as we mentioned, I like this one here. This is a daily swing point though. So now I'm a little more hesitant to want to enter to continue to reach for buy side. And look at that. That's why. Right, and why is that? Here I'm fine going long, right? Where we kind of have the same scenario of we're gone through buy side. Why do I feel comfortable going long here and not trying to go long here? It's just the nature of the PD array that we targeted, right? So this is a short-term high, and it's also sure that daily high. But in the short term for today, this is a short-term high when we're aiming for this daily swing point here. So now as we close above it, and especially because we close above it instantly, right? We don't wick it one time. The very first time we come up here, we close above it right away. So that already to me is signifying price wants to continue to reach for this one here. So I'm okay using now the most recent discount to long into our target. Whereas here, right, I mean, it's pretty obvious. We simply wick this area. No type of confirmation through it. No type of expansion through it. In fact, the bodies get nowhere near that level at all wick. So when the bodies can't get near that level, and we understand it's already a daily, weekly swing point, this is where the rejections are more likely to occur and the retracements lower, right, kind of start happening. So I'm not trying to go long in here to target another run higher. If we can get above it and then give us some type of long setup, then I'd feel comfortable using it. But as soon as we hit that, right, I'm not trying to go long off there. Oh, look at that, Jake. I didn't even see your question. Yes. Good question. I'm still saltine though. And like now, oh, it's not even going to give you a chance though. But right now is when we would come back down for lows, original consolidation lows. This is when discounts now can start being disrespected, okay? Buy side of the curve, up, consolidation, accumulation, reaccumulation into objective. Well, now if we break through, especially this 5 minute right here, if we close below this, my interest goes back towards low, low, right? I would start looking for the discounts that held on the way up to be violated on the way down. So we got 5 minutes till that candle actually closes, so we'll see, right? It's this one here. Notice how that 5 minute and 1 minute align perfectly. Consequent encroachments. In a short-term sense, we have closed underneath. So let's see what we would do here on a short-term sense. Because now I would not actually want to see price come up here. Breakaway gap, measuring gap, potentially. Let's say if we did that. Third deviation, the 5 minute. Oh my goodness, okay. Third deviation equals the low formed at 9:30. Not random. From our measuring gap. First equaled this, hit that. Look at how we close on the second. Wow. That's why I love the algorithm. Look at that right there. Let me slide it over so y'all can see. First one, close on it. Second one, close right on it. Third one, aligned with sell side. That's the target. That's what we're reaching for. We've created a new bearish fair value gap aligned with an old 1 minute, an old 5 minute. We're not even going to run into it. Did the 30-second give an entry? Nope. Sheesh. But yeah, we'll go in there for sure. Look at that. Fifth standard deviation is previous day high. Clean, clean, clean. Went 95.25. Stop too small, whipped out. Oh, what you mean? 95.25. 95. Oh, wait. 95.25. You went long at 95.25, you're saying? Oh, you tried going short here. Ah, yeah, you played yourself. I mean, that's a good idea, but always above the swing high there. At least for me. If I'm entering without a break in structure, my stop will always be above the swing high. Always, always, always. He said God cheap. That's all right, brother. But let's watch that third standard deviation be kissed. How nice would it be to just close on it? We could wick it. I bet you if we tap it, we'll probably stop right on it. Oh, I lied. Right through it. It said, nah, we ain't playing. We going through it. Okay, so that is maybe one chance here. Using the inversion breaker. Oh yeah, look how we wick it though. Wicked it. May go for the fifth. I'm also going to look at this range from high, low, higher, high. Manipulation leg up. Wow. Look at this, okay? You can get multiple projections from multiple different PD arrays. So we were using the measuring gap. Third standard deviation is sell side. Look at this. Take the manipulation leg into the buy side that we break, right? That's another form of projections. Second standard deviation and third standard deviation are the same as the measuring gap standard deviations. I mean, this one is the exact same level and it's sell side. So when you see things like this, that's what gives you the confirmation that price will reach into that. Right? So as soon as we saw that here, we were here closing on it, here closing on it. We understand, okay, yeah, we're going for that. We close below now. I kind of want to try a volume balance entry. Let's paper trade this here. Huge down move. Let's see if we wanted to get 5 handles. A little 1 to 2, something like that. Try this here. Oh, sign in. Uh-oh. We're too slow. Sell it. We'll see if we can't get 5 handles on a paper trade into the old daily low. Oh, it's stinky. Love you, honey. Have a good day. It stays open so we could use it. At least Reed was right. Break higher time from swing high. SMT with NQ. Broke a bullish for value gap with a bearish. Facts. Everything you'd want to see for sure right there. Right, as we speak of last discount, as we get through, you could have even used this. That would have gave you a better entry. Because as we continue to speak of, say we're bearish, the last discount, once we hit an objective, if that discount gets overtaken, you could use that immediately to go short. So in this case, the last discount formed prior to that buy side is this volume imbalance. As soon as this gives way, you can already go short. You see it's paired with the fair value gap. Like you say, right? Obvious entry there. Using that. You probably went like here. That's a crazy stop if you did one handle. You got extra greedy, brother. That's only 2 handles to the top right there. That's all right. Let's see if we can get into that target. I feel shame. Where's the shame? You gotta wear the dunce cap. That's what no one tells you. You just gotta get bullied into being a good trader. That's all. Where'd you with this one here? Oh, for B. Poor B. That's just comedy. Hey, I just laugh because I feel you. I've been there. Right? Anytime I laugh at y'all, I'm laughing with y'all. Get that? Because I've made every single mistake you guys have made. I've made it twice, and that's the only reason I'm at where I'm at now. I did everything wrong, so I know what not to do. Made every single mistake you could probably make. Failed every time. Eventually, you lose long enough. You start figuring out why you're losing. Let's go there. Let's reach into that, though. Okay? Let's just get into that. Matter of fact, there's equal lows. Okay. Oh my goodness, brother. Equal lows aligned with third standard deviation of manipulative leg. Here. Look at that. Pink. Love it. Also love these. Let's go like this. We'll go with this one. At this point, we broke through that low. Okay. We did leave a 2-minute fair value gap. So what I'm actually going to do right above the 2-minute fair value gap. So we'll leave just a classic 2-handle stop. That's fair. Still expecting it to not be broken, okay? But we're targeting here the relative equal lows, kind of aligned with the standard deviation projections that we've gotten. Quick run through of the concept trade idea from the top. The concept trade, oh sure, yeah, just right how you could have gotten short. So the thing that we often speak of, when price is running into objectives, it's going to create bullish structure. It's going to create discounts along the way, right? Discounts in the form of fair value gaps, order blocks, volume imbalance. Doesn't really matter. There's just discounts. One way that we can confirm that we want to go short now. So say that we are delivering into this objective and we don't expect price to continue to run higher. What we look for is the most recent discounts that formed as we deliver into that, we want to see broken. Okay, so here, the most recent discounts formed was first this fair value gap and then this volume imbalance. The volume imbalance is the absolute most recent one. So when we hit that level and now overtake that, that in itself is a sign that we can trust that as an inversion to go short. But notice more importantly that when we overtake that, we are creating now a new premium. So when we overtake discounts with premiums, vice versa for longs, right? If we can overtake premiums with discounts, that's a good sign that price will move in really our intended direction. So we overtake the discount with a new premium. We can use that premium to short, as we mentioned, stop above the highest high. Also, it's above this buy side here as well. And then from there, you don't really get a re-entry. You get one more inversion entry. So as we break through once again, this discount here, we go up and tap that, off to the races. Same thing here. Inversion, 5-minute use, off to the races. Right, and I see price is pretty bearish and we're not giving deep retracements, which is why I'm using this. Because now we create a volume imbalance. We create first a wick low. When we break a wick with the fair value gap, that becomes balanced. Right, we wick low, we break through it. We engineer a new volume imbalance. And now we push through the low, holding the volume imbalance and engineering a new volume imbalance as we've closed underneath. So if we're going to close underneath this sell side, and now we're delivering into projections, I don't expect a deeper retracement into all of these inefficiencies up here. If anything, I really wouldn't want much higher than like that 2-minute, which is why our stop is there. So if we did run up into there, get stopped out, well, we just eat that, and then we'd have to see if we can get another confirmation potentially to take us lower. Because we've just cleared a short-term low, which is why we're getting that little retracement. Right, so we've cleared this low here from 710. And as we say, old discounts that have offered us support we'll often hesitate at, but we want to see those be broken. So now we're hesitating here. Ideally, we get underneath that, right? Return through those lows into the target. What we'll actually do is take a partial at 5 handles which would be right in line with this old level here. Actually, no, it's paper. No need for that. I'll have to switch to ES1. Yeah, that's what I'm saying, man. I know that's where I do differentiate from Michael. But I'm okay with that. Right? He has said himself, got to make it your own thing, individualized. And for me, I have always found ES1 to deliver more precisely in my analysis. Right? Well, like you say, I found that the actual contracts will fall short of certain highs, or they won't actually like deliver to targets. So like if I'm trading it long or short, it's not delivering into the target as I would expect. So yeah, I stay with ES. I stay with the contracts adjustment on. I mean, as you saw this morning, I would say it's pretty precise. Tapped 15-minute breakaway gap, targeting relative or regular trading hours. Could be, honestly. Because that gap is all the way down at 45.64. So we could keep going lower, right? That gives added confirmation that we may want to do that if we want to reach for the regular trading hour. About to hit our target on the sell side. What's the midnight level? Do we come back into midnight? Close below this, break even. Target met. Target met. Hello. Target met. Hello. Come on. Say psych. We'll have to box. That's disrespectful. The disrespect is real, brother. Nah, we'll get there though. We'll engineer a little fair value gap right here. We'll use that paired with the old low. I'll be absolutely weak. Above this, we're in trouble. Market played us, didn't want to exit us out. That is crazy. Should have just manually closed, I guess. That's on us. That's the issue with these goddamn concepts, though, right? You get too precise. Once you figure it out, once you get these targets down, sometimes the price will literally, like you see here, be too precise and hit that hoe. We're about to reverse. That was my chance to get out. Right, I should have went for the deviation here. No, we still got a chance. Risk-free trade, so at this point, oh well. Still holding the consequent encroachment of the fair value gap, right? So that's good. Just say it. Only need to worry if we get above that. Ideally, we close in this bullish volume imbalance, negate that, run lower, through the low. Matter of fact, learned our lesson once. We'll go 5 handles. All right, you guys win. The market prevails. 5 handle exit if we can get back down there. because we've rebalanced this, okay? We reprice into it. We close underneath it. Don't want to see that broke. Stop a little bit more lower here. Which, you know what? Here's what we're doing. Because I am still greedy. We'll close in one right there. Buy one there. Okay. Partialed at the 5th standard deviation. Now our stop goes above the swing high, where the stop wall and profit. Final target still now equal lows, right? Multiple equal lows here. Should smack into those bad boys. If we want to keep going lower, maybe get into that 15-minute there. 45.74. We'll see though. Bam, baby. Hello. Okay. There it is. Cool. So there we go. Right, we take that short understanding. After we have delivered into the buy side, we have broken through this low. Right, this whole thing here. Let's not get lost. Mark it as fractal. High to a low to the highest high that gets broken. We close underneath this low here. Breaker, right? Lowest down close candle. Notice if I drag out this, bleep, boom. So we close under the breaker. This is why I'm going short as well. We close under this low, signifying a breaker here. We do that with the volume imbalance. That's why volume imbalance entry, right? As price runs up into that, we go short. Still have our objective here in sell side. We've now cleared the equal lows. We may want to keep pumping though. Let's see. Same thing now. Wicked lower, broke it with a fair value gap, followed by a new volume imbalance. We've gotten into the 15, however. What about the hourly? And the hourly, so I don't know if we want to continue to run lower. If we do, we shouldn't break this here at all. Okay, old daily low, or not daily, just the liquidity low we've just cleared. There's that midnight we spoke of. We may want to get into that midnight. We want to keep stacking. We could try it, I guess. If we really are bearish, okay, we shouldn't break this here. So what we can do is, let's try something like this. A little higher risk here. Still paper, right? That's why we're fine. Going back in. All right, seeing that though, I'm immediately, cutting it. Bloop. I'd close more of it, but with the paper, we're not doing it because we give up that consequent encroachment. Wanted this to be a wick and for us to hold the daily level here. We don't. So it's just a higher likelihood that we get stopped now. Especially because we've won to third drive. So we're kind of hoping more on a continuation pattern here. If we can overtake that, that'd be nice. Kind of hold the high of this. Might have a chance. Giving it the old one candles chance. Yeah, NQ close to its midnight also. We hold the 2-minute fair value gap. Look at that. Oh, wait. A capped. No 2-minute fair value gap. See, I don't like how we're using the old low as support, though. So we can't get back underneath it. I want to see us get underneath that. This is the previous day high. I lied. I forget the indicator. This light blue level here, previous day high, previous day high. So we're back underneath previous day high with the fair value gap. If we're going to continue lower, we should use that level. Not right, find support. If we start breaking them back above previous day high, then I do think we come back for all this inefficiency. Because on the way down now, right, we've created all these unfilled inefficiencies here. Equal highs, relative equal highs, unfilled inefficiency, unfilled, unfilled. So it makes sense to see some type of retracement. Pass the challenge. Nice, congrats. FOMO'd. Were you chasing longs, or what you mean by that? How'd you get FOMO'd, brother? If we close above this fair value gap, I might just close this position. I mean, we'll just let it rock. But ideally, right, I would usually cut risk here again. Chase the longs. That's all right, though. It happens. Did we close above this? Never did. Okay. Nice. Yeah, highly likelihood of consolidation. Especially because we went buy side of the curve, daily high, to now sell side of the curve, equal lows paired with old daily level. Heading into with that last kind of half hour of the morning, could see that consolidation taking place. Especially because we've put in the opening range now, okay? 9:30 to 10:30. So 9:30 to 10:30, highest high and highest low, that becomes opening range. Let me go like this. We don't really need all of this anymore. Bam. This is the highest high, this is the lowest low. Take equilibrium of that. Equilibrium is this inefficiency here, which is a consequent encroachment of that fair value gap as well. So we may want to head higher actually, because usually if we break the 9:30 to 10:30 range, we'll continue in that given direction, right? So if we were to break through this low, we'd continue lower. The fact that we cannot break through that low, failed to, now we're closing above the most recent premium before, right, delivering lower, forming a new discount, makes me think we'll go back into the range. So kind of the same way we had here, where we hit our objective, and now the discount in here gets overtaken. That's kind of what we're having here. We deliver into our objective. The premium that was formed delivering into our objective gets overtaken. So yeah, we would expect holding that level. Yeah, we'd expect higher prices. I would expect higher prices anyway. Trend continuation pattern, ascending triangle. Oh, you're brother. Are you being for real right now? I don't want to hate on you, but you can't just trade patterns for pattern's sake, my dog. That's why you get chopped up. I see that's like almost just straight retail if I'm being completely honest. Yes, let's try that. Always. Yeah, do the opposite. I mean, that would be a strategy. I like that better. Doing the opposite of whatever it would tell you. Ooh, close. We almost got stopped there. Interesting. Hold the fair value gap still. Volume imbalance, no wick higher. Pretty bearish signature. Straight lower through a low. Consolidation signatures here though. If we don't break soon, as we mentioned, we may just play around now the old daily high. So back into an old daily level. We're holding being compressed between PD arrays, right? So inversion, this here holding us back and forth. If we do close below, however, this fair value gap, we may try to re-add the one contract we took off. Did we close underneath it? We did. Oh, wait. Can't play myself. Gotta make sure it's exact. Okay. We close right on it. Yeah, close right on it. Oh, look at that. Seeks with the knowledge. Seeks with the wisdom. That's what we like to see. I like that. I like that. At this point, we go like that. Stop there. If we close below this at all, we'll try to use it again to add one more, maybe. Maybe we can get that short into the midnight. Still though, notice how we're not closing underneath it. We're closing right on it. 30-second. Same thing. Can't trust it yet. All right, fellas. We may and nah, I forgot we're in a trade. I was like, we may end it. I think we'll just consolidate here, but we'll wait. We'll wait. We're in this paper trade. We either get stopped or we get a partial first, and then we'll decide. 5-handle partial. Let us wait. Let us wait. Let us wait, and let us see. Apex just came out with a new copier, a trade copier. That's what I was using this morning, kind of messing around with it. It's actually pretty good. I think I'll stick with Apex forever now. It allows you to trade on TradingView, but copy the trades to all the accounts through Ninja. So I'm like, oh, say less. That's what I've been waiting for. I don't know, honestly. The account I would suggest would be. It really depends on you. That's what's tough. What's your risk tolerance? If you're someone that is not comfortable with the idea of risking, right? Or if you still think, let's say, in like dollar amount, right? So like risking $1,000 is going to be extreme for you. Probably start with a lower account. If you're fine with the money management and you look at it more in terms of percentage gain and loss rather than like a monetary value, any account you really can afford, to be honest, as long as you trust in your abilities. Yeah, you missed Apex's 90% off sale. Gosh dang, should have loaded up. Also depends if you want to do futures or just forex or both. Because if you want to do both, you're gonna have to go with like a forex firm. All right, come on, let's do something. Take me out of my misery at least. Bullish YouTube model. Short term low cleared. fair value gap on a 30-second, aligning with old daily low. Buy side. SMT here though, NQ ran that high, ES didn't run the high. Yeah, we're full on consolidation. We'll see what 1050 to 1110 gets you. Yeah, the live drawdown, that is tough with Apex. Like, so someone that does swing trades, that'll probably affect them. For me though, because of how I trade, right, I'm usually not ever giving much profits back. I partial a lot, I have shorter targets. So for me, that live trailing drawdown isn't as big as an issue as someone who kind of tries to maybe trade, right, daily ranges or things like that. Because it can be tricky. And it trails from your highest profit regardless of if you close it or not too, which is also another thing. So honestly, there's so many different options. That's what's tough to recommend one exactly. Certain prop firms have better guidelines than others. Certain have better payout processes. For me, I simply went with Apex because they're obviously the cheapest, right? I'm not at that point anymore to where I'm trying to get money fast. Right? So I don't need to be getting payouts constantly or quickly. So with the cheap Apex thing, now that they offer 20 accounts, right, you can build massive portfolios with them. The new trade copier allows me to trade straight through TradingView. I don't have to worry about it. The opening, the entry longer opening. Yeah, that one was, let me pull up my other screen up for you quickly. You'll probably want to see that. I have 3 with Apex. I just bought another 1, 2, 3, 4, 5, 6, 7. So I just bought another 7. That's what I'm using. So I'll have 11 or 10. I'll have 10. Math is hard. 10 accounts. It'll be right at 1 million if we pass them all. Let me change this window for you. You want to see this one here. So the long entry, okay? We were using the 5-minute fair value gap that was in here. Let's go back to the 5. So on the way up, we haven't hit that buy side. This buy side's our target. Look at that. That's beautiful though. Swing low to high. Anyways, sidetrack. Buy side here is the target. We haven't hit that yet. On the way up, we're forming the buy side of the curve, okay? We're respecting 5-minute fair value gap. So 5-minute discount respected, 5-minute discount respected, 5-minute discount respected, 5-minute fair value gap respected, 5-minute fair value gap here respected. Breaking through a high, creating a market structure shift with a new 5-minute fair value gap. So for us, right, it's pretty simple. This 5-minute fair value gap should be respected. We've already shown multiple times that price wants to continue higher. We're holding every 5-minute discount. We've yet to reach our objective. There's no need to try to go against what the market is saying, right? We're not trying to short anything until we hit our target. So once this 5-minute fair value gap forms, we really go in straight on that. Right, so we go in straight on it, right near the consequent encroachment. So as it was tapping into consequent encroachment, I go long as it quickly rejects there. And then our exit was simply the buy side high. So on a 1-minute chart, right, it looks like this. I was entering where the 5-minute and 1-minute overlapped. So now within the 5-minute fair value gap, there's a 1-minute fair value gap that shares its consequent encroachment, right? Same level. So as we go into that 1 minute, that's why I go long. We're tapping into the 1 minute within the 5-minute, within the breaker, low, high, lower low, broken, up close candle becomes our breaker within the breaker block. So everything is aligning. Everything is already aligning there for higher prices. And so we enter on the swing low. We then run up into our objective. Still salty about this because it should have exited me on this candle so we could get the swing high of the morning. But nope. 1 tick away from the swing high. That's some bullshit, huh? Yeah, besides that, pretty simple. Right, we were also looking at this little baby 1 minute. So once we got back above that, we understood that we shouldn't break this low, which is why our stop was there. We wick into it one more time, get up and through, and there's our target. NQ reversed. Ah, that's too bad. Yeah, I don't mess with NQ no more. ES is my baby. Ironic, honestly. I've gotten down so specialized to really one thing. I used to be looking at a lot of instruments, right, trying to trade them all, but now ES, and that's about it. But yeah. So after we clear that buy side, then we revert into, so if this was the sell model, original consolidation here, like we mentioned, accumulation and reaccumulation into smart money reversal, right? Distribution. Don't really get any redistributions. We'd have to look on smaller time frames. They happen quickly in here. But ultimately we get lower. And now we consolidate here. And we've pumped. Oh, we've actually might have ran out my stop. Oh yeah, so the paper trade, probably run that out. We did hold that 30-second though. That's funny. Right, so we were looking at this here, that YouTube model. Short-term low, broken. With the fair value gap. That holds us. Delivers us 5. Yeah, I'll use it or NQ as SMT at times. Just so you guys know, right? I wouldn't really be trust going long here because we're consolidating and we created equal lows. Just in case any of you were wondering. So even though we call this out, I wouldn't be taking this, right? I would miss a move like this. That's fine. We don't need to be involved in every swing. Something very important to learn. Like for us, right? This is all we did this morning, and that's plenty. Plenty, plenty. But I think we'll go ahead and wrap up today then. Don't have too much to look for now. Let's see. For me, I would look for, I mean, to be honest, like I said, that's a daily, that's a weekly, that's a very sensitive and important buy side pool that we've just cleared. We're holding the old daily high, however, and now we have this fair value gap that is formed on a 15-minute. So to be honest, this here is also a YouTube model, okay? Wait, go like this. For the buy side. Short-term high cleared. Long-term high cleared. Breaking structure through the low with heavy displacement, leaving a fair value gap. So if I'm being quite honest, higher time frame wise, I would look for a continued run lower. Maybe into, if we can hold this and we can close, right? If we can close back underneath the old daily high, so this level here, I like the idea of coming back into midnight. So potentially that's what we get for the afternoon. Because also remember, right? I spoke about how, oh, we didn't do it. Okay, never mind. I was gonna say that opening range from 9:30 to 10:30 here. So the highest high and lowest low. If we break that, it's a very high chance that we continue in that direction. But notice we actually never left that range. So I still would believe though, if we could leave that range, that's what would lead me to think that we should be able to reach lower. Into like, yeah, the midnight level for sure. So I'd be looking for maybe some shorts in here. If you get some type of short confirmation heading into the afternoon, that is what I would kind of be leaning towards. Looking for shorts rather than longs at this point. Second day, learning a lot. Hey, welcome, man. Glad you find it beneficial. Continue to show up. You'll continue to improve, I'm sure. There's so much to learn. But all right, we got time. Not in no rush. But yeah, if we don't have any questions, then I think we'll be good for today. Just one trade. That's all I need. But I'm content with that. I want to say we got 7 handles out of it. 89 up to 96. Yep, 7. A little over 7. So just under 8 handles on the morning. No really real opportunity to go short unless we took this up here. But we're fine missing that lower. And then now just kind of bouncing there. So if I do anything in the afternoon, I'll obviously record it and then share it with you guys. But for now, I'll be content with where we're at. It stings every time. Sorry, B. That's comedy. It's right. You need to feel the pain so you understand not to do it. But I know that pain very well. I can't tell you how many times I told myself. I even wrote it in my notebook. When I first started, I was like, never move my stop loss below a swing low or a swing high. And then I would move it and I'd get taken out, but the lower high would hold. I was like, bro. And then the next day, I'm like, all right, if I enter this position, my stop loss will not be moved below or above a swing high. I would move it, get stopped out. Just a constant pain of, or a constant cycle of making the same mistake over and over until I eventually stop making it. Yeah, that's the way. Right, feel that pain, close the charts, it'll be there. Go do something you enjoy. FIFA. More of a 2K guy myself. 2K golf. I've been heavy on that 2K golf lately. Yeah, never been good at that. I tried playing it once and I was just ass. Just got ran. Like, damn, brother. The cats are chill this morning, actually. They're starting to get along better. Too early to be causing chaos, I guess. Fine with me. Yeah, we should get back into here though. So this is, remember, this is equilibrium of the range we're within. I'd look for this first, and then if we hit 830 and give us some type of short, at that time I'd feel comfortable shorting, especially the fact that we left these equal lows here. To me is suspect. So we may want to revisit that in the future. But all right. I think that is the final goodbye. The classic 8 goodbyes later. Tomorrow morning, we will have our last stream of the week. Make sure our news is aligned. We have high impact news tomorrow morning. 6:30. Okay. So all the news coming out 8:30 Eastern. So we'll do the normal live stream at 9:25. So until then, everybody, have a good rest of the day. Be safe. And we will talk tomorrow morning. See you guys.